If billionaires are so rich, why don't they just keep their money sitting in the bank? The truth is, they don't. Here's why. Banks don't cover billions. Here's the first reason billionaires don't keep their money in the bank. Banks don't cover billions. Let me explain. When you put money in a bank, it's insured, meaning if the bank fails, you get your money back, but only up to a limit. For example, in the US, the government protects only $250,000 per bank account. So if you had $1 million in that bank and the bank collapsed, you'd only be guaranteed $250,000 back. The other $750,000 could disappear. Now imagine a billionaire with $1 billion. That would mean they'd need 4 million separate bank accounts just to have it all insured. Impossible, right? That's why they don't just dump billions into the bank. It's too risky. Cash loses value. Another reason billionaires don't keep piles of cash in the bank is because cash loses value over time. This is called inflation. Inflation means that the prices of everyday things go up, so your money buys less than before. For example, in 2000, a McDonald's cheeseburger cost about 99 cents. Today, the same burger is around $3 or more. Same burger, but your dollar buys less. Or take milk. In 1995, a gallon of milk cost about $2.48. By 2010, it was $3.26, and in 2025, it's around $4.05. The milk didn't change much, but the money lost power. That's why billionaires don't let their cash just sit in the bank. Instead, they put it into assets, like businesses, real estate, or stocks, that grow faster than inflation, so their money keeps its value. They invest in assets. Billionaires don't just leave money in the bank, they put it into assets.
Assets are things that grow in value or make money for you. Think of houses, land, businesses, or stocks. Why do they do this? Because assets can increase in value and give them extra income. Cash just sits still, but assets work for you. For example, imagine buying a house in 2000 for $200,000. If you kept $200,000 cash in the bank, today it would still be $200,000. $200,000, maybe a little more with interest. But that house today could be worth $500,000 or more, and you could even rent it out for extra money every month. Whew. That's the power of assets. That's why billionaires invest in companies, real estate, or stocks. It's not about having money sitting still. It's about making their money grow bigger and bigger. Tax advantages. Another reason billionaires don't keep money in the bank is because of tax advantages. Here's what that means. When you earn money from a salary, you pay income tax. But billionaires often avoid selling their assets because selling creates taxes. Instead, they borrow money against their assets. For example, imagine Elon Musk owns billions of dollars in Tesla stock. If he sells $1 billion of that stock, he has to pay huge taxes. But if he keeps the stock and goes to the bank, he can say, "I'll use my Tesla shares as collateral, give me a loan." The bank might lend him $500 million. Now he has $500 million in cash to spend, but he didn't sell his stock, so no taxes are due. Later, he can pay back the loan while his stock keeps growing in value. That's the secret. Billionaires use their assets like credit cards. They borrow against them, spend the money, and avoid big tax bills, something you and I can't do at the same scale. So the next time you imagine a billionaire with a giant bank account full of cash, think again. Their money is constantly working, not sitting idle.